15% capital growth in just 7 months and a property paying for itself. It may be very hard to believe that these properties actually exist, especially if you're looking in capital cities, but they do. And here to show us where to find them is Simon Presley, Head of Property Market Research and Managing Director of Propertyology. Simon, surely you jest. It cannot be possible to find those kinds of growths and returns in today's property market. Where do you find a high growth cash flow property outside of a capital city, clearly, because they're not in them?
Well, other than Hobart, Sophie, that's correct. They're not in capital cities here and now. But look, it's always a good time to invest. The important question for investors is never when, it's always where. This current period that we're in, where 7 out of 8 capital cities have been very underwhelming, has been coming for a couple of years, but we've also said during the last couple of years, Sophie, that people need to remove the blinkers, that things are really starting to perform quite nicely outside of our capital cities. And for those who know how to look, there's many of them out there.
I love that you say, the time to invest is now, it's just where. Some people consider that, the regional areas are a higher risk compared to the metropolitan areas, but your research is different. What do you think's fueling that?
Look, what's fueling locations outside of capital cities, James, is jobs growth largely. I mean, Australia as a country has had a few really strong years of jobs growth, but it's not contained to our capital cities. Mining is recovering. Agriculture has a very exciting outlook in this country. Large parts of our manufacturing sector, especially food related, are creating lots of jobs. Our health industry is expanding. That's not just hospitals in capital cities, it's right throughout the country. So it's an employment story, it's an affordability story as well. And some people who were living in a capital city are relocating for lifestyle reasons, for affordabilities, to other parts of Australia. It's often not reported how regional population is growing, but there's actually 33 regional locations where their population growth last year was equal to or better than 4 of our 8 capital cities.
So what sort of investors should be looking to those regions?
Look, it's really a buy and hold investor. That's certainly the strategy that Propertyology adopts. Now, whether that's a first-time investor, someone looking to rent-vest, for example, it could be a budget-conscious investor with a limited price point. Once you get outside of capital cities, there's literally dozens of very affordable options to look at the fundamentals of. And it's also someone looking to diversify. Very common for us to have an investor who might have a budget of $700,000 to $1 million or whatever it is, but that's one very expensive property in say Melbourne or Sydney. But when you get outside of capital cities, that could be 2 or 3 properties in completely different locations. So you expose yourself to a lot more opportunities by spreading that capital across multiple locations, and you also get stronger cash flows. So I would argue that that's actually a much less risky strategy than buying all your eggs in the one basket property, say $1 million in an expensive city like Sydney.
Well, I love the eggs in one basket analogy, because I think regional areas and I think eggs that actually taste fantastic. You mentioned about being able to spread the portfolio a little bit and maybe buy a couple of properties instead of one. What other ways do you think that investors can sort of make money in these markets?
Look, it really is. I mean, you can be a developer, you can be a renovator. The same things you do in a capital city, you can do obviously outside of a capital city. But I think it's ideally suited if someone might live in a capital city, but just because you live in that capital city, that doesn't necessarily mean it's the best place to invest in. I'll use the analogy of a share investor. Look, just because you might have a Dolomite account, it doesn't necessarily mean that you should buy all your shares with Commonwealth Bank. You need to consider all of those companies on the stock exchange. So when it comes time to investing in property, for those who choose that asset class to fund future retirement, they owe it to themselves to explore all locations throughout Australia, which is capital cities and our regional locations. But I think for a lot of people, James, region might imply risk, and certainly there are parts of regional Australia that I would consider to be too risky to invest in. But capital city doesn't mean safe either. The typical property in Sydney has declined by about $100,000 over the last 12 months, and you might have to fork out $25,000 to $30,000 a year to hold that asset. But there's lots of, and I'm not kidding, there'd be dozens of locations throughout Australia, non-capital city, that I describe as a mini capital city. So they're a smaller scale version of Sydney, Melbourne, Brisbane, for example. They've got essential infrastructure, they've got plenty of employment options, they do have a diverse economy, they've got a really good lifestyle, and they've got affordable housing in spades.
All right, Simon, well, you put your money where your mouth is, don't you, with this regional investing strategy. So let's have a look at a case study now. Tell us about one of that's in your portfolio.
Yeah, so this is a property, I think we've got some images of a particular house there. I personally bought that late February this year, paid $375,000 for that property. We chose it because it was low maintenance, structurally sound. Not all properties look as nice as that. Some of them look nicer than that. We don't get too focused on the aesthetics because they're the things that the property owner can adjust very easily. We've got a tenant straight away, $375 per week for that. That's only a 5-minute walk to the city centre.
The city centre of where, Simon?
I can't actually say this particular location, sorry to tease, but we're still actually investing in this location, and the clients we're trying to get in that market wouldn't think too kindly of me if I blurted on national TV where that location was. But I thought it was important to show what's possible for people out there. There's certainly nothing wrong with this property, as you can see. No. $375,000, that's a lot of bang for your buck, and it has grown by 15% in about 7 or 8 months, and it's just starting its growth cycle.
Now, you can't say that name, and that's fine. We know you're looking after your clients, but you have chosen Orange as an example of a high-growth, cash flow-rich area. How do you find that information, and how can you sort of explain to other people to find a similar property for themselves, a similar town?
Yeah, look, so to help the investor at home, James, I thought Orange was one of many examples we could have chosen to describe what I said earlier about being a mini capital city. So Orange is a well-established city. It's 200 odd years old. There's a lot more people living in Orange today than what there was 200 years ago. It's got all the essential infrastructure that you would expect of every capital city. It's got quality retail facilities. It's got a very diverse economy. Its most important industry is health. Orange actually has one of the most modern, elaborate hospitals in all of Australia. It's a teaching hospital as well. There's lots of people who might study medicine in a home city, or Sydney, Melbourne, Brisbane, for example, and then when they graduate, they might actually relocate to Orange. Lots of them actually then stay there and raise their family. There's a Charles Sturt University there, which is important for tertiary education, for retaining its youth, but it also attracts people who want to study, not necessarily in a capital city. The Cardia gold mine is one of the biggest gold mines in the entire world. It's only about a 15-minute drive outside of Orange. It's got a foodie lifestyle, got really clean air, and a typical house might cost $400,000. Orange population growth rate. Each year it grows at a similar rate to say, Adelaide, Hobart, Perth, Gosford, so there's certainly nothing wrong with that. A typical example of a mini capital city in one of dozens.
Now, you have faith in these areas. Do the banks have faith in those sorts of places? Because finance conditions are pretty tough for borrowers at the moment.
Finance conditions have tightened, but it hasn't been necessarily tightened because of regional markets. It's tightened across the board. In fact, there are a number of capital city suburbs that some banks have actually blacklisted, especially if you're looking to buy into the apartment market. There are parts of regional Australia, not just now, but at any time when banks will have a closer look at. But they are typically the one industry towns. I mean, if we go back a few years ago when the mining industry, for example, was having a downturn, banks quite rightly got concerned about lending money in those one industry towns. Similarly, they could do that from time to time with a small tourism location or something like that. But what we're talking about here is well-established, very diverse, strong regional cities. I put it to any investor, to any bank, because of the diversity of the economy and the affordability of housing, combined with these locations haven't been smashed with all this supply like some of our big cities have. The risk there is a lot lower than many of our capital cities at the moment.
Now, for investment, it's about being able to sort of access equity and use that money to invest again in another property. You talked about that property that you had in your hidden location, and you said it wasn't so important to sort of do so much to the property because it was aesthetic, but you did get a great rental return straight away. Do you see that as the big thing about being able to make that a secure investment and then being able to access the equity in the property? How would you recommend that to people?
Yeah, look, I mean, the buy and hold investor, I mean, you know, none of us have got a crystal ball, James, obviously, but what we're trying to do is pick up a market that often at the time of investing it might be flat. What we aim to do is understand the economic drivers of that particular city and look for locations where there's sign of an economy improving. Now, that's not, you know, one website, that's lots of information, but when you get that right, you're buying in a market while it's flat, you don't have all that competition, and then when prices rise in the coming years, that's when that investor has the option of tapping into that equity and repeating the exercise in another market somewhere else.
There are still
Cycles are very important though.
Yeah, there are still plenty of people who are finding it tough to get finance. So do you have any advice? What are the best tricks to try and secure a loan with the banks at the moment?
Yeah, I mean, look, this is obviously partly or largely related to the Royal Commission. Credit is still available. Certainly, you know, good quality credit. The banks can't lend enough of it. They've actually got more money now than they have had for a long period of time and do want to lend it out. But quite rightly, the police are sort of looking over their shoulder, making sure they're not cutting any corners. So I guess for a motivated you know, investor who really wanted to take their financial future seriously, it's just going to take you a bit longer than what it would have taken a couple of years ago. But if you've got all your, you know, tax returns, pay slips, loan statements, you know, just be organised. And unfortunately, you need to be patient because banks are taking, you know, a good few weeks to assess that application. But do that. It's in your interest to do that because it's your future that we're talking about. But banks are certainly lending money. They're just less efficient than what they were a couple of years ago.
Simon, just before you go, I mean, you've mentioned Orange. Can you just reel off, you know, half a dozen other sort of big regional centres which you think are worth a look for investors?
Yeah, look, over the last 12 months, Sophie, there's actually 64 locations outside of our capital cities that have had price growth over the last 12 months. Now, we wouldn't know that listening to the mainstream sort of media, would we? Because our capital cities haven't performing well. But let me give you some examples of what's happening in our various states. Warragul grew by 18% last 12 months. Geelong and Wonthaggi in Victoria are also double-digit price growth. Warrnambool, Shepparton, Kyabram, Latrobe, all strong markets in Victoria. Kiama in New South Wales, Lismore 13%, Lithgow double-digit, Forbes double-digit. Bathurst is starting to perform well. Tamworth, Maitland, Coffs Harbour 9%. So lots of options in New South Wales. Noosa's been the strongest market in Queensland at the moment. Chinchilla is recovering. Be careful in locations like that is sort of a one industry location. Gympie's performing well. Gold Coast is still very solid. In Tasmania, Launceston, you know, double-digit price growth, but Burnie and Devonport are also performing quite solidly at the moment. Western Australia, it's more south of Perth in locations such as Busselton and Albany that are showing recovery ahead of Perth. And in South Australia, it's an agricultural story. Places like Berry, the York Peninsula, Whyalla is recovering, and the Barossa. So there are plenty of options out there, but look for locations that have a diverse economy combined with that affordable housing.
Yeah,
well, that was more than half a dozen, wasn't it?
Yeah, very generous with the information.
And yet he wouldn't tell us where that house was. Yeah,
no, but you can grab a glass of wine if you invest in Barossa. Simon, really good advice. Thank you so much. I'm presuming people who don't know how to do it themselves and find it all a little bit daunting can find out some more information on your website.
Propertyology.com.au. Thanks for the plug, James. I owe you one.
That's all right, mate. You share information with us. We like looking after you too. Thanks so much,
Good
as
on you,
always, to have you on the show.
Thank you. Have a good afternoon.